Hello and welcome to this analysis of dollar index. My name is Vic. I'm the founder of Agenza Capital Management. Thanks for joining me here. In this analysis, we're going to be looking at the dollar from higher time frame point of view, and we will also go into smaller time frames to see if there are any kind of opportunities which are coming in the market. Even if you're not trading dollar index, even if you're not trading dollar, you should still pay attention to it because this is the most important underlying asset or most underlying factor in the entire market. So stay tuned. Okay, so let's start from higher time frame. This is what we had. We have been following this analysis, this particular trading plan or analysis for a long time now. Um, we are in FCP zone, and this particular W pattern has already been completed. Remember, we have been bullish from this particular point because we knew that this W pattern was going to get completed around this level of 110.27. Market came right into that level and has started to show some rejection here. If I go to smaller time frame, you'll see that the market tried to go beyond that level 110.270, but it has now been rejected. If you pay attention to the most recent candle, which is the current month of September 2022, this is not a very good candle. The reason being, usually this sort of candle actually creates a kind of bear or bull traps. So a lot of people will think that this is a pin bar, which is it's turning into a pin bar. But so far the month has not ended, so anything can happen. Yeah, it does look like a pin bar, but what I'm expecting it to go and go at least the previous high of the previous candle, or even turn into a proper bullish candle with a little wick at the top. So that is quite a possibility. So whatever rejection that we have seen in past few days or even the last week, you see this rejection is not much as of now. It is not a kind of confirmation for the dollar to reverse. However, we are in FCP zone, and the market may actually come back down. We don't have a confirmation as of yet. So what we need to do is actually monitor the daily time frame and probably smaller time frames to find a confirmation to see whether the market breaks through any structure, or if you're using Gata and Visage or any other software to find a confirmation, then you can also use that. But so far what I can see, that market is right here, which is previous structure. Let me show you how I see it on Vata and Visage. So on Vata and Visage, if I go to the monthly time frame, we can see that the spin bar is forming. But as I said, this is not confirmed as of yet because we are still in this month and the month has just finished the first week of it. Now, if I go to the weekly time frame, if I go to weekly time frame, what I see is that this is still bullish. If you can see that this is blue in color and this is blue, and we had a very good bullish signal here, and which has not reached its target yet. So if I show you where the target is approximately here around 111.9, so 112 or so. Okay, it has reached the previous target here, the one which is available around 109.729, and showed some rejection, but it has not reached this one. So there is still a chance that market could actually go back up, collect all the stop losses, create a fake breakout, those sort of thing, and then start to fall back. And that is why we should be careful with dollar, especially when it has been bullish for so long now. This thing on daily time frame, as you can see, there is a divergence here. Market has been going up, but what a trend has been showing that the market could be falling down. And we also have a short signal, this red arrow, and we have this proximate target. However, we must always pay attention to the structure and important levels. So this is where we are right now. The market has fallen, but it has got stuck into this previous structure, which shows that the market can still go back up, and this signal may get invalidated because of that. So what we are going to do is monitor this market for any kind of sign to the upside, and we will hold on to short positions. We will not take any short positions, and we will, if we are short already, then we'll have to manage those positions. So now another thing that I will bring to your attention is this gap. Now DXY usually does not leave any kind of gaps open. There are several gaps which have been open all the way down to 90 level. So at some point in time in future, whenever the time is right, nobody knows when, but it is going to fall down to 90. That's for sure. However, this gap is fairly new, between this candle and this one. So it is possible that market is visiting this structure level here, and in the next day or so it will try to go back up. It is possible that it can go down and then come back up, but this gap is a kind of threat to a short positions. So beware of this particular gap here. Okay, so overall we are still looking for short positions on DXY. However, the market is not ready yet. You see, this is here, and market could actually go up slightly above this FCP zone, create a divergence again, collect the stop losses which have accumulated above the previous high, and then start to fall down. Now if it starts to fall down, then there are some important levels which can be reached, and I will update that in our social media channels and in our premium analysis report. You can always order a premium analysis report which covers all those levels and all the scenarios which we use for ourselves. So that is still a possibility. Now on the bullish side of things, if the market continues to go higher, if the dollar stays bullish even after this, then the next level that we have got is 113.482, that FCP zone, okay, and possibly 115.373. That is our target too. But for that, we have to have a breakout of this FCP zone and a confirmation. Now, if this FCP zone of 115 is also broken and confirmed, then we can expect a DXY to reach 127 point or 130, that FCP zone. That is also quite a possibility. So what we should do is we should just monitor this FCP zone and look for any kind of confirmation to go short on, because it can actually give us very good short positions. However, there is a risk of that unfilled gap and stop loss collection, and because of this market being very very bullish, there is still a chance that market can go up to 113.482. So you have to manage that position, your short positions, accordingly, right? So this is what we have on DXY dollar index. I hope you enjoyed this analysis. If you did, please make sure that you hit the like button and share it with other traders and trading communities, and I'll see you in the next one. Have a great trading week. Thank you for watching. Find and follow us on these social media channels.